Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Friday, May 28, 2021 for a Forex market analysis video and webinar for you. Before we get into the webinar, we want to just show you our disclaimer to remind you that this video is for illustrative and educational purposes only. Also, if you have not already subscribed to our YouTube or Twitch channels, whichever way you're watching us, please do so, or do so to both. That way you'll be notified when we are broadcasting and keep up with current events with Forex Trading Unlocked. And also check out the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com in paperback and Kindle versions. We will be highlighting one of those signals in our webinar today. All right, now let's get into what you are all here for. We have our live action screen pulled up here. And we have the forex-trading-unlocked.com website also pulled up. From our navigation bar, we've already pulled up the workstation page. And since it's Friday and we already have numbers that have already been out, it's already 10 o'clock Chicago time almost, there is nothing left for us to worry about there. We have the Euro US dollar pulled up right now. Now, as you can see, the Euro US dollar is slightly lower on the day. However, it did have quite the sell-off. It fell just shy of our target band right here, which is $1.2125 down to $1.2091. So the target just barely did not get hit. So 2 sessions ago, back on Wednesday, we had this sell-off here. This is the bearish engulfing line sell signal right there. Yesterday's trading was pretty uneventful and just kind of stabilizing. Now we are coming off of a higher move high, and still we are making a higher move low. We would have to take out this level right here around $1.2050 for us to even remotely become neutral to slightly bearish. Remember, the trend is your friend. We're coming off of higher move highs, making a higher move low. Now this is the question. Should we take out this level here at $1.20 well, then we have a bigger target level of $1.1982 for a sell-off extreme, which also comes in here at another critical swing low. So we're flirting with some potential digestion for this market. So we'll see how this manifests over the course of the next week or so. Now remember, we are in a holiday market for the United States. So that's a big thing to remember, that trading is going to be thin today. It already is. We have all of the action for the week is complete for the foreign markets. We have the weekend ahead of us, and remember, the U.S. markets will be closed on Monday. So the only thing that's going to be open is the cryptocurrencies. So for the most part in America, yes, the currency market, Forex markets will be open around the globe, but they will probably be very thin. So take that into account if you're entering any new positions, whether it be the Euro US dollar that we're looking at now or anything else. Now here's something. We had the sell signal 2 sessions ago. It is now right around the area where the entry price was. So this is actually potentially a low-risk selling area where we're at right now, around $1.22, $1.2181 where we're trading right now. The risk level is this $1.2267. So for any shorts right now, for sure, I would use caution. You do not want to be short above $1.2267. The dollar right now, I wouldn't say is in a free fall, but the Euro US dollar is the biggest component of the dollar index, making that index continue to be a fall under pressure. Some of the other currencies, though, as we will take a look at, are rebounding or correcting, meaning that the dollar is not necessarily gaining strength, but it is definitely in a bullish correction versus some other currencies. So, since we don't have any questions on the chat, we will jump over to the next market. So if you guys have any questions about the Euro US dollar and a Euro cross, or even any other crosses, just pop the question out on the chat bar, and we will take a look at it. All right, so let's jump over to the UK. British pound US dollar is still flirting with higher move highs. It's been trending higher as well. Now with oil staying high and looking with a breakout right now to the upside that it's flirting with, I would use caution trying to be a bear here. Right now we don't have any signals in the British pound US dollar. Should we get a breach of $1.4240 above here, it may just inch higher. We do have a upside target of $1.44.5. The key is that if we start to make new highs, we can take out this high from March. That's a big deal. We fell just below, short of it, and now we've been bobbling underneath it. The question is, can we sustain a trade above of $1.4243? So basically, the high from the other day is just falling short of this friction point. I would assume, now I could be wrong, but when you have situations like this, you probably are going to have a lot of buy stops here. So all your weak shorts that are selling into these new highs, especially range traders that don't want to break out, that's probably going to be an area where you'll have some fresh buying come in just by attrition of stops. And could that cause a spike? Yeah. Could that also be the beginning of a new leg higher? Absolutely. I would key off of the price of oil. If oil continues to get a breakout to the upside in the global market, especially come Monday and Sunday night, I would be very mindful of the pound US dollar potentially breaking out to the upside. Once again, we don't have a sell signal, so this, just because the euro has a short-term sell signal doesn't mean the pound has to sell off versus the dollar. And with interest rates being kind of stable right now to slightly lower, meaning higher in bond pricing, the dollar doesn't seem to have the strength overall, again, to be a bull versus most currencies. So any market that the dollar is correcting against right now is most likely for other factors. So oil is keeping this market up. Momentum is keeping this up. And remember that higher move highs and higher move lows is indicative of what? A bull trend. So that is all that is happening here. Do not try and jump in front of this trend, because this has been a powerful trend for a year, and no matter what, it has had a lot of resilience over the past few months as it's tried to sell off, and all it did really was consolidate and make a base. So like literally, even if we started to take out this $1.40.90, $1.40.70, we have a room to correct down a few bucks here no matter what, without it being any significant correction, let alone it would just be floating back into a range that it basically is set. And that's something that could be happening too. Let's say that oil starts to really hover between 60 and does not break out to the upside above 70. We could really be floating in this range for another couple of months. So this is a key area here around this $1.4234 up to $1.42 half. If we do get above there, I think you will see momentum build. So longer term trend traders will most likely see the pound US dollar hit up to that $1.44 area. All right, so that's what we have for the British pound US dollar. Let's go to the US dollar CHF. All right, so this one isn't a free fall. It's higher today. The dollar bulls are getting a little bounce, but right now we are coming off of a lower move low. Only if we come out above 90.96 will we confirm even remotely a higher move high on a intermediate term that could at least put us in a neutral posture. So short-term bulls, you have to be aggressive. I would key off of the low from a few sessions back. You do not want to be long here, and I wouldn't doubt that all your weak longs have stops right around this low. So if we come back down below there, odds are that a further precipitation of the trend will continue. So we don't have very much to talk about here. Like I said, since we don't have a signal here whatsoever, what we do have is a very, very strong bearish trend. Any rally right now is being viewed as an upside correction. If we were to see a big sell-off in the interest rate markets in the 30-year and the 10-year notes, I think then you might be able to see the U.S. dollar Swiss continue its rally to the upside. And also if we get a big rally in oil. So if we get oil above 70 and get the treasury bonds back down around $1.54, $1.53 basis point, or 153 basis points, that would probably be where you could go. I don't think that that's going to happen in the short run. So odds are we probably are starting to build a base here where we're going to go sideways. Remember, we're coming into summertime. Are we going to have summertime markets that really dull up? I really don't believe we will, but I do think that we are in for a little period of consolidation over the next couple of weeks. There's a lot of geopolitical stuff that's going on. All right. US dollar yen, like, it's hard to be a US dollar yen bull, but no matter what, it's been slowly making higher move highs and higher move lows on a short-term basis. We had our downside correction into the end of April, and somehow this one, while the dollar has been collapsing versus most currencies, this one has been inching its way higher. It does have some, it does like to sell off more than it likes to rally. You can see it gets the strength, and then it just sleepily grinds away. I would say that if it's probably because oil is hovering below that $66 a barrel, that we are looking for more continued strength here. Should oil get above 66 and get back to that 67, 68, $69 a barrel territory, odds are very likely that the US dollar yen is going to continue to stay above this rising support line here and look for a challenge of 111.02, 111 even, basically. Above here, we'd have a longer term upside target for the US dollar yen of 111 half and 111.70, that little target band. That would be probably the initial place to put some brakes on, but longer term we are looking for 113 to 114 half, actually extreme, just because we're looking for oil to get above 75 on its way to $100 a barrel over the next 3 to 6 months. So that's a longer term trend trade. Should oil continue to maintain that posture, let alone especially get above $70 a barrel, I would be hard pressed to find us still trading around this 108 to 109 area. Odds are very likely that we will be trading way above 111 if that occurs. So watch those markets. They definitely influence this trade. Right now we have a nice little bullish bounce here. As far as, here's another thing to consider too, is let's just say that this was just a corrective rally that we have going on in here. We now have hit through the 0.618 retracement, and now we're even going to a 0.786 right there. It's just, notice how it topped off of that today. So any trading above today's high really looks like that. In fact, we'll move this arrow up to here. So anything above this level here has us definitely looking for a challenge of this area here. And like I said, also, unless we fail from 108.55 here, it's very unlikely that we're going to see any type of really extended sell-off. Now what could possibly bring this on? Well, anything could. But let's just say all of a sudden we get a sell-off in the oil markets and you see oil get back down to 60 bucks a barrel or even less, into the 50s. And that would be the thing that I could see pulling the US dollar yen trade back down to this 106, 105 area. Is that likely to happen? On so many levels, I can only joke at that one. And I'm not even going to get into that one. So, but just to let you know, be mindful of what those markets are doing. Now here's one that's becoming a sleepy, annoying trade. The Australian dollar, US dollar, we've been calling for range trade markets for quite some time, and guess what? We've been getting it. That's what's going on. So I don't know how we're going to see anything break out for this market for a while yet. The main reason being is that as global trade does start to come into fruition again, China's supposedly firing on all cylinders again. Of course, we know we can't trust those numbers. Remember, this is one of the reasons why I don't trust those numbers. We've basically been in a range trade for the Australian dollar, US dollar, for the whole year. I mean, if you really look at it here, we floated up. Here's 2021. Here's our base. We tried to fall through it here. We tried to fall through it here. All it did was establish a base. And then we even have the tighter range, which is more like here into right where we're at right here. Okay, so this wider area here, this really becomes our downside breakout area. This becomes our upside breakout area. So what do we have in between there? A lot of this, just a lot of chopping around. Now it's still a wide range. It's not like there's not opportunity, but that's when you come down into like the hourly charts. This is where your hourly swing trading is, but I shun people who trade the hourly. You have to be a very experienced trader, have patience, and know when to not be bothering with it, because otherwise you're just going to get eaten alive by the machines. So that being said, we have really nothing to go on with the Australian dollar, US dollar. We do not have any very strong signals looking like they're going to manifest anytime soon. Short run, this is very choppy and neutral. As it made higher move highs, higher move lows on a longer term basis from April. Tried to flirt with this break right here. It's holding. This could have us back down into this range, but we're not looking for any major sell-off, because it still would be a higher move low than there on the longer term. So this one is a mixed bag of goods. Good luck trading it. Aussie dollar versus other currency crosses, on the other hand, may not be a bad deal out there for most people. There are other crosses besides the Australian dollar, US dollar, So, but that's something to wait for a signal, like I said. Now, New Zealand dollar, US dollar, this is one that's kind of interesting. It did have a nice little breakout to the upside. This one has more of an established uptrend. Is it really bullish? Just still, if you look at it and you break it down, has a lot of sideways action, just like the Australian dollar, US dollar. But it has been cleaner and a slope over the last few months than the Australian dollar. And this one is buffering a breakout to the upside continuously, whereas the Australian dollar is definitely more of a sideways EKG style trading, which is very indecisive. It's hard for swing traders to get a grasp of it and catch a move. You almost have to wait for a new trend to truly be confirmed, which you'll miss that first leg, and then have to move on to start jumping in on those trades. But that's a whole nother topic of discussion. So right now, this is another one where it is bullish in the short run. We don't see any major targets to the upside to shoot for. We don't have a buy signal or a sell signal. So right now, we're just in limbo and we are waiting. Now let's look at the US dollar Canada. This is another one that has been gaining from the strength in oil. Oil's been on a little bit of a pause. You can see that this has been on a little bit of a pause. Overall, I would use cautious with this one, my friends. This one is in such a major bear trend against us. We haven't had any significant bullish corrections in any one that we have. I mean, look at this. Was back in January. It rallied for like a week and a half, collapsed. Rallied for 2 days, collapsed. This one tried to grind higher for a couple weeks, and then for a month it just settles into sideways chop, where see how it's just expanding its lower move lows. Even here it made a higher move high to kind of try and look like it wanted to break out to the upside, and then in the same day made a lower move low. This day here confirms like how vicious this bear trend is right here, where you form something like that on a daily basis. And from this, from this day, look at the momentum. It drove us all the way down into the May trade here. It is now trying to base. We made this low over here. I would say if you are an aggressive bull, this should be your risk level right here, the low from a week and a half ago. Any trading below $1.2011 has this market in the gutter. I would say be very cautious about trying to trade this market. Unless it's from the short side, and if anything, I would wait for a rally to sell, waiting for this kind of thing to happen, and then for the market to collapse again. What I would key off of is oil. Geopolitically, we have issues between the U.S. and Canada. Ironically, I don't know where that comes from, because usually we don't have these problems, especially with an administration like we have right now, so I totally don't get what's going on with that. But as far as the oil trade, that is what's driving this. So as oil continues to inch higher, I think you're going to remain in this holding pattern, looking to continue to test support. Only a big sell-off in oil would give us the reason to see any type of upside correction, which would be viewed as an upside correction, and nothing that we would be looking for to hold in the longer run. So that is something that please be very mindful of as you move forward with the trade, over the next couple of sessions, and actually the next couple of weeks as well, because this is something that is not going away, folks. Like, I know that a lot of people, when they first start watching our videos, are like, oh, he talks about all these other markets. Well, that's what drives markets. Everything hinges on multiple other mechanisms out there. So even though you're looking at currencies, remember, you need to watch interest rates. Interest rates are a function of currency pricing. If you are ignorant to interest rate moves and interest rate trends, then you are only forcing or hurting yourself in a major way, because it is a component of what you need to be aware of. And the same is for other markets as well, like oil. Definitely, for instance, because Canada produces oil, it's a big deal. Like, for instance, since we're talking about this, see how we have the US dollar Canada. Let's look at the JPY Canada. Look at that getting slammed. You know why this is getting slammed? Because Japan doesn't produce oil. Canada does. Canada exports oil to Japan. How about that one? So with the price of oil going the way it is, look at this trend. This hasn't been going down. Look at this. The whole year has been trending lower and lower and lower. Ever since oil really fell off the map, boom. See how this totally came down? This is a big slide for the US dollar, for the Japanese yen versus the Canada. So this is a way that you can integrate other currencies by seeing how these trends work. So if you want to see strength, look at US dollar JPY. So once again, we're talking about the oil trade. With the US dollar Japanese yen, now here's the thing is, the price of oil is a big deal, and it's going up. This one doesn't go as severe as US dollar Canada. You know why? Because as of January 20th, we no longer export oil anymore. So since we no longer export oil, that means Japan, which was one of our allies and one of our customers, they no longer have supply coming from us. So that means that when oil goes up, it helps to support this trade, but not so much. It's only because we are an oil producer, so that makes us stronger versus the yen, because we don't need to buy oil, although now we are a net importer of oil. So once again, see how the US dollar Japanese yen is dictated by the price of oil. Then let's go also to the JPY Canada once again, and you can see how this power drives down. Now let's put it against something like this, GBP CAD. See how this is a big sideways right now, and it has been trending lower, but that was more because of Brexit and some other things. But once oil stabilized, this one's a very neutral trade. And also during the oil break, there was times where the pound rallied against it. This is one where it gets harder because they both produce oil. Okay, so now let's go to AUD CAD, and you can see how this works too. All right, now Australian dollar, Canada as well. This is one. See now, Australia, they supply oil to basically China. So in that case, this is where Australian dollar doesn't hold up versus the Canada, because their oil is not reaching the world market as much as the Canadians do. So, and also it has to be a matter of output. Canada relies on oil in a big way, and other natural resources. So this is a way you can use the markets to view the strength and weakness of the other markets. And this one, once again, is being dictated by the oil markets. So we have some more viewers now that have joined us now on both YouTube and also on Twitch. I want to thank you very much. Hope you guys have some questions. Since we're looking at these now, we're going to take our little cryptocurrency section come out now. All right, so we go to our Bitcoin page, and oh wait, this was a little too high for you, so let's go pull up another workstation page. This will be easier. All right, so let's clean this up. Let's get rid of this noise here, and let's look at the Btc Usd. So Bitcoin, what's going on with the cryptocurrencies? I'm sure all you guys have some questions. We're going to talk about these a little bit before we jump back into the Forex markets. Bitcoin has definitely been on one crazy ride for the past couple months, has it not? I mean, this is crazy. I remember when it was flirting with these higher highs at 60,000 and this, and I know some people that bought in the 58,000 thought they were all geniuses when it got to 64. They're sitting on it right now, and they're not very happy with themselves. So, but they could be just buying into the next break. So remember that Bitcoin, like all markets, has corrections. This is a very sloppy trade in front of the holiday market. I think what you have here when you see the sell-off that has occurred, it has to do with unemployment. I would watch that number. We had good claims that came out yesterday, and I think that's why you're seeing this selling off here. You got to remember that with the stimulus from the U.S., there was an outpouring of cash into not just the stock market, but into the cryptocurrency market. And as states have started to unwind their payments in front of the federal government, you have people returning to work. Okay, now with them returning to work and them now working and making money, they have some expenses they didn't have before, and they also now are going to be more concerned about their money because they're the ones that are generating it. They don't have to. They're not getting that free check that is guaranteed to come in on a weekly basis. Plus, they're not getting paid more to work than they were. Some people were actually making more on unemployment than they were in their jobs. So I think that inflow of cash is coming to a halt. So what you have now is, I think you've had a lot of people liquidate, and you have more sellers than buyers of the of Bitcoin and other cryptocurrencies. Now let's take a look at Ethereum. Ethereum has bounced pretty nice. Now, it needed a correction, just like Bitcoin did. This one's a little bit smoother. It seems to be where Bitcoin has kind of come down and is chopping in a narrower way. This one looks like it just wants to bottom out and start to end this correction. With Ethereum, this looks more like a correction than it does a bear market. I mean, granted, it's been making lower move lows and lower move highs on a short-run basis in the past couple weeks. But on a monthly basis, this is just a correction. So I don't think that unless Ethereum gets below basically around this low here or this low here, like if it gets down to 1,500 to 1,300, that would be I would think a very good support base, but that would have me more worried about the longer term trend and viability as an asset in the short run, but this is one where the technology seems like it's holding up, and more people have faith in this one, just like they have faith in Bitcoin. Now let's look at Monero. This is another one, like looks more like Bitcoin. Now it's more into a neutral trade. It looks like the correction has pretty much run its course, and it came into a balancing area here where this is a big support area. So if you kind of look at it, if this was like the breakout area here and here, these two little spots here, this is where we really started this trend to the upside. But then basically this little line here, this is the key that helped to catapult us. We fell back into, which is this basing area here, and you can see we're trying to hold above 244. I think if we can get back above 287, there's a good chance that we'll start to at least raise the consolidation. Am I looking for a big rally back to the highs? Absolutely not in the short run. Could anything happen? Absolutely, and always does. The question is right now, is there enough strength and support for that? I don't believe so. I think what we do have, though, is where we are finding that this is a good area of support and value for Monero, which is somewhere between $100 and, like, say, $60 and $280. So we're right in the middle of it, around 240. That's a good balance. I think you're going to find value of buying at these levels, where people see that if it's 50% off its high, this is a good area once again for it to be for it to manifest and be okay. And now, as far as where would we want to see us get above, well, then we got to go to, let's put a little fib here. So let's see. Let's say if we take this high to this low here, and we're going to put in the 50%. Just 0.618%. All right, so what does that mean? So that means right here that should we get back above 287, we have a good chance of getting into this little area here. If this is just a beginning of a bear trend, this would be about the high of any correction that we would see. If we get above this area here, then there's a really good likelihood that we are going to come and challenge these highs up there, and the bull market will be back in effect. So we'll have to watch those. We currently are long those currencies. Here's the old Doge coin. Everyone's talking about Doge, especially the kids. If you have kids that have actually somehow made some money over the past couple months, let alone the past year with this, be mindful of their 1099s that are coming from Robinhood, that's for sure, because you want to make sure they didn't blow that cash. Otherwise, you're responsible for their taxes. So anyhow, this one here, unlike the other cryptocurrencies, this one is obviously in a correction like the rest, but this one looks more like it wants to come back and test support. There's a lot of reasons for this one. This one, if anything, does have probably the earmarks of a tulip bulb effect. You have a lot of interest that is more marketed in Dogecoin than you do have reality of technology viability and what have you. It has had such an extreme run up. If you think about where it was back in April, here we have it at a nickel, and now it's still trading, 6 times higher than it was just a month and a half ago. Is that sustainable? Probably not. What I would really be leery of too is that if this thing does start to hit support, it could really hit support back down to the 10-cent mark, even back down to somewhere around the 5 cents. Key off of this recent low here, and also of this recent low back here to set the base for the extended corrective sell-off that we've had. The trend is your friend. Long term, it's a bear. Intermediate, it's a neutral trade, and short term it's a bear. So I would use caution. Watch out for this upward sloping support line. Notice how this comes in on a time factor right by this low. So this area is huge right in here. Any violation of this area, and I would really be leery of being along this market. I heard some people, I remember when it was up at 70 cents, being like, if this thing gets down to 30 cents, I'm going to buy it. Well, yeah, that's like a good 50% earmark. That's not necessarily a bad idea to find as a buying target on a basic, entry level theory, because I buy into the 50% rule. However, you have to be mindful of the trend and the reality of the functions of what this market really is. And the fact that there is no real viability on it. It is all more a pumped up thing because of a lot of interest. You have more buyers than sellers, so the whales have been making money on this one. I really am leery of this area here. Now, should we get a rally back above 70 cents here? Well, then this thing seems that it will obviously have the momentum and interest to fuel more excitement. But I think right now in the short run, it's I don't know, this is the true test to see whether or not this is going to have sustainability for a bull trend moving forward into the next 3 to 6 months. This is the one of the current cryptocurrencies I'd be very cautious with watching and trading. So BTC USD, let's get back to this one once again on the daily. This one has a much more established bear trend. It is looking like it wants to base, but it also still looks like it wants to flirt with support. I think this will put a drag on the crypto market as a whole, and we'll see how this rides out. I think if anything, we're going to have more of a digestive phase here. Unlikely to really have a big sell-off, but I also am not looking for any big buy here. So on any given day or 3-day move, for instance, which this is going more sideways, if we get a sell-off like today, let's say it stays where it's at today, and then tomorrow, and it's a weekend, we see a sell-off, odds are you'll probably see a little bit of a drag on the other cryptocurrencies, and the opposite is true for the upside. So let's look at the Euro US dollar. We don't have any questions on the chat today, guys. You guys are quiet, but there's people popping in. We got a couple likes on our YouTube feed. Hopefully, we got some likes on the Twitch feed as well. Let me just double check here to make sure that we don't have any questions on the chat. No, there is no questions on the chat here. All right, okay. That is all good. We have no problems with that. So anyhow, we've been covering this stuff since we've been talking about these markets. Look at what happened to the Euro US dollar. Let's go to this screen out where they have the lines all drawn up. All right, so since we've been talking, there's been a nice little rally. Look at this. We've been talking now for, how long has this webinar been going on? We've been going on for a half an hour here. In the past half an hour, look at this. Boom. We have a continuation thing. Now, markets tend to go out like they come in. As you can see, we dropped down in a few hours like that, and now we're bouncing back into this little area. Probably going to run out of gas. Remember, we're in a holiday market. All the foreign markets are closed, and it is now just a thin U.S. holiday trade. I'd be cautious with this one. Not that it couldn't explode to the upside, but this is also looking like it's this holiday market reaction, especially if you look at it's 10:30 now, here's 9:30, here's 8:30. So this is when the stock market was closed. It opened in the US. We had the first 3 hours of trading here, blah blah blah. euro dollar's getting pounded a little bit. I wouldn't really read into it that much, but we did come just short of our price target down here of our range for the sell signal. So remember the bearish engulfing line sell signal that we have still in place. We fell just short of our initial target range. Once it falls in there, that signal is done. Okay, longer run, longer term, if this is the beginning of a trend correction, meaning a bigger size break, then we have this target at $1.1982. But we have to fall through this area, and also we have to fail at $1.20 half. Now $1.20 half, a failure from there really does set us up to at least come down into here, and then that flirts with this low here, which sets us up for a longer slide down towards 118 half, 118 even area. But we don't want to get ahead of ourselves, and the only way that we see that happening is if we see a big bond rally and also a big rally in oil. So with that being said, I want to say thank you very much for all your time. Please remember to subscribe to our YouTube and Twitch channels and like them, then pass them on to your friends. And also come and see us for the next webinar. And also remember to check out the book High Probable Japanese Candlestick Patterns, written by yours truly, available on Amazon.com in paperback and Kindle versions. And through it you can learn how to trade that bearish engulfing line and incorporate it into your own trading strategies. With that being said, I want to say have a very nice holiday weekend for those of you that are in the U.S. from Forex Trading Unlocked. And always check us out at www.forex-trading-unlocked.com.